M2 money supply, year-on-year, YOY, is a key economic indicator that measures the annual growth rate of a country's M2 money supply. M2 is a broad measure of the money supply that includes cash and coins in circulation, demand deposits, savings deposits, time deposits, and money market securities and other near-money assets. The YOY growth rate of M2 reflects how much the money supply has expanded or contracted compared to the same period in the previous year. It is a critical metric for understanding monetary policy, inflation trends, and overall economic liquidity. The calculation for M2 YOY is as follows. M2 YOY equals the difference between M2 in the current period and M2 in the same period last year, divided by M2 in the same period last year, multiplied by 100. For example, if M2 was 10 trillion in January 2023 and 9 trillion in January 2022, the YOY growth rate is calculated as 10, 9, 9 x 100, which equals 11.1%. The importance of M2 money supply YOY lies in its implications for monetary policy, inflation, and economic activity. Central banks, such as the Federal Reserve and the European Central Bank, monitor M2 growth to assess the effectiveness of their policies, including interest rate changes or quantitative easing. Rapid growth in M2 can signal excess liquidity in the economy, potentially leading to inflation if not matched by economic growth. Higher M2 growth may indicate increased consumer spending and investment, while slower growth may signal economic stagnation. Several factors influence M2 growth, including central bank policies, bank lending, consumer behavior, and economic conditions. Expansionary policies, such as lowering interest rates or quantitative easing, increase M2, while contractionary policies reduce it. Increased lending by commercial banks boosts M2, and higher savings rates or increased demand for cash can also affect M2. During recessions, M2 growth may slow as demand for credit declines. M2 data is typically released monthly by central banks or statistical agencies, such as the Federal Reserve in the US or the People's Bank of China. It is often analyzed alongside other monetary indicators like M1, M3, and inflation rates. For instance, during the COVID-19 pandemic, many countries saw a sharp increase in M2 growth due to stimulus measures and quantitative easing. In contrast, during periods of tight monetary policy, M2 growth may slow or even turn negative. M2 money supply. YOY matters for several reasons. Central banks use M2 growth to gauge inflationary pressures and adjust monetary policy accordingly. Analysts use M2 trends to predict economic growth, consumer spending, and investment activity. Investors monitor M2 growth to assess liquidity conditions and potential impacts on asset prices. The relationship between M2 and inflation is explained by the quantity theory of money, which states that excessive growth in the money supply without corresponding economic growth can lead to inflation. For example, if M2 grows by 10% YOY but GDP grows by only 2%, the excess liquidity may drive inflation. As an example calculation, if M2 was 15 trillion in December 2023 and 14 trillion in December 2022, the YOY growth rate is calculated as 15, 14, 14 x 100, which equals 7.1%.